Hello and welcome to Options Guide TV. My name is Brian Overby, author of the Options Playbook, and I'll be your host for about the next 20 minutes here on Options Guide TV. All right, so the markets are down a little bit mixed across the board. I'm going to look at gold today. We've been doing on Options Guide TV, basically, almost a small hedge fund, if you will, buying some deep in the money tech stocks, buying some deep in the money calls on Amazon, on Google, on Nvidia, and those stocks are they're I don't know, they're just kind of in a period of consolidation is what I would say, and been selling some premium against them. And I've been doing a little bit of this in my own account. UNH is a trade that we put together last week, heading into their earnings report, but there's not too much difference to talk about there in UNH. I just want to come up with a new trade to look at this week that's going to be a little bit more short term. We looked at a deeper, what was the word? We looked at a structure of trades by looking at an at the money short put spread as a way to get bullish on a stock that you like, something that is liquid. And we looked at that in Amazon. We made that an official paper trade. We're going to come back and we'll look at it again, but it's a 45-day trade. Amazon is down a little bit with a lot of the rest of the Mag 7. So let's look at gold. Let's lean into some of the bullishness that we've seen on gold. And so here's the chart. Now we're in the Tradier Pro software. Here's gold. Here's the run up, and here's the drawback that we had. Never even got down to the 50-day moving average. Came all the way back. We broke through the 20-day. Now we're back here towards new highs. I want to target this area up here, the 403 area right now. Gold at this moment is at 395.95. It's up 51 cents on the day. GLD is the ETF that tracks gold. It does a real good job of hanging with gold prices, but also realize that gold brings in some risk because GLD doesn't trade 24/7, but the price of gold does, or the gold just in general does. So if we're now right down here, right around 395, we're going to target this high level with one of our open wing butterflies, and if it goes to that level or breaks out to the upside, we'll still be good. But we're kind of thinking we might go back and retest this 403 area. So here's going to be the official paper trade for the day. We're going to look to go out around, and gold is very liquid, the GLD, I should say, is very liquid. So we're going to go about 11 days. We're going to give this a short-term trade. I thought about going into the new year, but I kind of want this trade to be done before the end of the new year. I don't mind going out to January 25 days out to January 9th. But I'm going to have this one finished over the holiday. So we're going to look at December 26th is that expiration date. This literally makes this a happy holidays trade, if you will. And so we're going to go that far. We're going to look to go buy something that's fairly close to where the underlying is at here. So we're going to go 396. Yeah, we're at 396. We'll go 397. Yes, we're going to buy that one. We're going to sell 402, and then so we got 4 points, and then let's go 2 points and buy and get that done for $1. All right, so let's send this to the what if calculator. December 26th is our expiration. All right, so total amount that we are wide here, we're 397 to 401. We look at the chart, 403 is the target. I guess it's the very height of this will be 402. If that happens, we're okay. Let's look at a small adjustment because this is inexpensive. But let's just talk about this trade right here, okay, that we sent to the what if calculator. So this is a butterfly is made up of two spreads. It is made up of a long call spread if we're going to get bullish, and it is made up of a short call spread. And the long call spread is the driver. This is the one, what would make you profitable if your forecast is correct. So we bought the 397, selling the 401. That is 4 points wide. That means if we just did the long call spread, the maximum that it could trade for is $4. Same case with our open wing butterfly. Our short spread is then we're going to sell the 401 and buy the 403. That is 2 points wide. So this short spread is going to cost us, well, we're not going to receive as much of a credit as if we did a standard butterfly where you sold this one and then went further out of the money and made this butterfly look normal, look like a standard butterfly. Because the further we go out of the money, the cheaper the option would be. But the huge benefit is that if we stop short, we pay a little bit more for it. But this is 4, this is 2. That means that we can make $2 if the stock blows through all of our strikes, if gold does, GLD, and trades above and beyond our highest strike, which is the 403. So in this instance, that means that it would be trading for $2. If we pay $1 for it, that means we're up $1. So if I highlight here, you look at the profit and loss graph, the 103 is at expiration. And that is where we'd be trading. On the 26th, if we're anywhere above that, we can make $1, which means we double on our position. If we get lucky that it goes right up to where it's just recently been and kind of hangs out there, well, then the most that we could make on it would be $4 minus the $1 or $3. And that's highlighted right here. Once again, let me put the cursor there. And you look down below and we're seeing 301 inside the what if calculator. So I like this is obviously a $1 trade. It'll cost you $100 to do a 1x2x1 open wing butterfly. Going to lean into some of the momentum on gold coming back again. And it kind of seems like it with Bitcoin's struggles recently. We see that people are just feeling better about gold. Markets are, it's odd to see gold go up while the markets are doing really well. But it kind of makes sense if you're thinking about AI and all the debt that's being taken on. I can understand the attraction of gold. And so because of that, we already came back and, tried to test. We didn't even, like I said, we didn't even hit I really thought we were going to, on this downturn, I thought we'd stop at the 50-day. And then we came back and we didn't hit it again. So we've got a nice little channel of higher highs. Each and every time it comes down, it sets a low, a little bit higher low, going a little bit higher high, trying to get back to this area right around 403. Okay, so ours is right here, 40. Let's go down to the 1. Right at the top of that recent candle, 401 is where we're targeting. If it goes above and beyond that, blows out the 403 and even goes higher, well, we're still fine on this trade. All right. Next, but I don't mind looking at an adjustment only because this is inexpensive. I mean, it's $1 to be able to do the trade the way we have it laid out. Let's try going 5 points wide. And now there's no half point strikes. And part of the reason why I went 4 is because the math is simple. The long spread is 4, the short spread is 2. It's half of the long spread. So let's try going 5 points, and then we'll go 2, and that'll give us a little bit more upside, but we're going to have to pay more upfront. Guessing we're going to get to about 150 or so. So let's try it. So 4, we were on the 97, right? 97. Yeah, let's stay there. 402. Sell that twice. And then we'll go 2 points, and we'll go to the 404, and we'll buy that one. 5 points, 97 to there, and 2 points here, 132. All right, so we get another extra buck there, and now it's got to trade for $3. So you pay 30 cents more. I don't mind that. but now we're looking for it to go to 402. So we do need it to go up a little higher to hit that maximum. But this isn't a bad trade-off. I like gold. I like the way the options trade. I like this underlying to trade, and it's kind of like UNH to me, and they're both about the same price. So UNH has been one of my favorite weekly trades whenever there is an opportunity, and we talked about that one a little bit. Yeah, I mean, we could even go back to the well in UNH. If we were very interested in it. Also, FedEx has earnings this week. They're announcing on Thursday, so probably look to do a earnings trade just because we can, because there is a company that's of interest that's got fairly liquid options that is going to be trading. All right, so here is so now you notice that this is steeper. It is 5 points wide, 2 points wide. That means the difference is 3 points. So instead of just being able to make $1, we can make $1.70. We'll call this 30. Let's put this on 30. It's at 39 now, though. Right? It'll be there. We'll call it 130. And up above here now. So here it's showing you it didn't grab 130. So it's saying 164.50 from here on up. That's the maximum that we can make. On the way down, the maximum we can lose is that 130. On the way down, it's saying 135, but that's where we're at, 135.50. Maximum we can make up here would be $5 minus that, or it's saying 360, we'll call it 362, $362. Now, the upside of being wider on the 5-point widespread, the downside is obvious. You pay more, you have more risk per 1 by 2 by 1 butterfly. If you're just looking at apples to apples, you're risking $1 versus you're risking $1.30. If the market comes up here, though, the wider that we are away from this, the easier it is for it to max out, because this option contract will, if you get deeper in the money, the time premium will go away and it'll become more and more intrinsic value. And as we go closer to here, we're a little bit further away, then this time value dries up. Because if you're correct on your forecast, what you need to happen is this is the profit and loss graph as of today, and that's going to start drifting on in and ultimately finish right at that strike. As expiration approaches, this starts moving, bending, and boom, there we are. Total amount, how many days we got? 11. We got 11 days. So we need this move to happen fairly quick. In order to make the maximum, it's going to happen somewhere within 2 or 3 days to expiration to hit, I'd say 2 days, to hit the 402 level. If it goes to 402, you need time to go away. You need time to decay in order to get this thing to pay you out anywhere close to the maximum that the trade would be on. Now, one of the reasons why I like this trade, though, is that, what if calculator, not chart, is that if the market does continue on up, there's no reason to close it up here, right? Because if it drifts down, let's say we wake up on today's Monday, we'll say wake up Thursday morning and the market's right here. It blows through the 403 level and breaks out to a new high, and it's staying right here. Well, now we know the maximum that we can make on the trade is going to be, well, in this instance, we'll call it 170, okay? And if the market drifts down as expiration approaches, you can actually end up making more because you have this right here. So you're not forced to get out. You still got to stay awake. You still got to be aware. But I don't have to take that profit up here and being worried about losing it. And especially in an underlying like gold. Now, gold will move. Yeah, I mean, it will move after hours. But I was going to say you don't really have to worry about the gap down on gold, but you do. That's really not true. During the day it doesn't trade as volatile, but I mean we got a couple of big candles here. Like this is a fairly big gap down, so I think that would be misleading to say that it doesn't gap as much as a normal stock. But okay, so with that said, This is I like this trade. I like this trade heading into the holiday. We'll have a trade to put on to talk about as the markets close. There isn't a 403 strike. What? Why isn't there a four? I'm sorry, Kurt. I see you said there isn't a 403 strike on the. Maybe you're not looking at the right expiration. December 26th expiration, which is 11 days away. I'd be very surprised if there is. I think you're looking at something wrong. I'm just guessing. I mean, you see me do it on the show all the time, where I think that there's a strike where there shouldn't be, and a lot of times it just has to do with the expiration. So that is the Friday of the holiday. Okay, there it is. Yep. Any questions about any of the other trades that we put on? Amazon, we sold a short put spread, and the market is down. Probably could have picked a little bit better underlying. More about the fact that on Friday we're talking about putting on a 45-day trade, trying to avoid earnings, how to adjust. Well, not necessarily adjust. If we're going to put it on for 45 days, and 45 days goes, or about half the time goes away, we're going to get out around day 20 if things aren't working out. If things are working out, happy to take some profit on the upside. And a lot of times, even if you're up 50% on a short put spread, it's okay to close it and roll it and open up a new one and ride that momentum to the upside. We have FedEx on Thursday, probably going to come in and do a trade on Wednesday on Options Guide TV to offset it. And I don't see any other questions. So on the Amazon trade, we sold, and I'll just go back to it. We're 45 days out now. We're going to be a little bit less. But Amazon is down today, $2.13. We did it at our strike is the 225, and we went 10 points wide. We got a really nice credit for it at the midpoint if we would have executed it. But we needed to be above 225. So we're down a little bit on that trade. 45 days, we put it on Wednesday. We'll come back. We'll look at this about halfway through the trade, and then we'll talk about wherever Amazon's at. We'll talk about either adjusting it or closing it or rolling it, and the whole thing. All right. No more questions. That's it for today's Options Guide TV. Thanks for stopping in. We'll check out the gold trade on Wednesday, and we'll look at doing a new trade in FedEx ahead of their earnings report. See you Wednesday.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.